Hey guys, John Polemy here, Actionable Intelligence Alert. Today is December 7th, 2019, Saturday. This is I believe, the 78th anniversary of the day that will live in infamy, the Japanese sneak attack on the U.S. naval forces at Pearl Harbor. It's kind of sits in my heart a little bit because when I was in the naval service, I served aboard the USS Midway, Carrier Vehicle 41, which was named after the Battle of Midway. I was also stationed in Pearl Harbor for 3 years, so I was intimately aware of the history of the battle, visited the memorial, the Arizona Memorial, and this attack being the catalyst for the U.S. entry into World War II. And, as our World War II veterans, they're almost all gone now. They're dying off quite rapidly now. Most of them that are still alive are in their 90s or pushing 100. I think it's, we should reflect on these things. We shouldn't forget, our history and the things that this country was able to do. I mean, that was the catalyst for us entering World War II, and our entry in World War II and opening up fronts on the Western Front in Europe, helping to put pressure on Germany and Soviets regrouping and attacking from the east, and then the island hopping in the major battles. I mean, I've listened to oral histories of veterans that fought in the Pacific, and the fighting was absolutely horrendous and brutal. You can't even imagine sometimes on both sides what people endured or in these battles. They were just barbaric, hand-to-hand, flamethrowers, machine gunning at close range. I mean, it was just awful. So I think it's, people forget history. They shouldn't forget history because history has a tendency to repeat, not necessarily exactly, but human nature does not change. And people might be saying, well, why are you telling me this? I don't care. What has this got to do with investing? Well, we're talking about actionable events, things that we are looking at that we can take advantage of or that are going to affect prices in the investment markets. And so we're going to segue into something now that a lot of people don't like, but this is kind of the historical narrative that I'm concerned about. And we're going to bring up our old friend here, Greta Thunberg. I found this picture. It was part of an article because she's very disappointed that the strikes and the climate action things that she's doing aren't really having any effect, which that's good in my book. But this picture, I don't subscribe to the fact that, well, we're dealing with a teenager. She has all these issues. I don't know what issues she has. I'm not her doctor. I don't care. This, to me, is the face of evil. When I look at this, I mean, you can joke about it, but, I start hearing that, chant from the old Omen movies, Damien, when he's getting ready to push somebody off a ladder or something. This type of rhetoric that this person utters is very dangerous. A recent article, she's revealed her true colors, basically her handler's true colors, because she just repeats verbatim what's put in her head. And these people are green on the inside and red, or green on the outside and red on the inside. What do I mean by that? They're using the climate change, global warming, and it constantly is changing because the narrative has to change because the facts are not supporting their narrative. But the ultimate goal is to create I've said this before in previous videos, and I get lambasted by people that believe this stuff, and that's fine. I mean, I have big shoulders. I'm just going to keep saying it. But, people empower globalists, people in the world that want more power. They are looking to consolidate their power. And, people, especially in the United States, have a history where they don't like centralized power. The United States really wasn't a place where socialism and communism could gain a foothold because people just didn't have that. We didn't have that in our historical genetic DNA. We were frontiersmen. We were lone wolf McQuade type people, pioneers, that type of thing. And we detested centralized control. So these people that want control know this. So they know that they can't sell socialism and communism, especially in the United States, to the people. And also in other places. People know it doesn't work, the majority of people. Yes, there's young people, millennials and stuff that are, but they don't understand the true history in the hundreds of millions of people, well, over 100 million people that have been murdered trying to forcibly put these systems in place. So these people that are controlling Greta and are for these things, they understand that too. So the view is to create a worldwide crisis, manufacture a crisis that is so big and so the ramifications are so terrible that and the actions need to be taken so soon, so quickly, and massive action needs to be taken that only a centralized authority could execute that plan in order to save us all. And that, of course, also means giving them power and money. That's what it's always about, money and power. It's been like that throughout time. And these people are relentless. You have your life. You have soccer games with your kids. You have a sick parent. You have hobbies. You want to just relax. You got work strains. These people devote their entire lives to these things, and they are relentless. And if they have to claw millimeter by millimeter towards their goal, that's what they'll do. And they have done. The march through the institutions, they control the press, they control the university and education system. They're doing all kinds of deplatforming. So when people say I'm a conspiracy theorist or I don't know what I'm talking about, they don't understand that they're being boiled slowly. You could see it if you open your eyes. And so this is dangerous. This is the agenda. Give up your freedom, give up your money, and we'll solve this problem. But fortunately, the scam is being seen for what it really is, a grab for unearned money and power. And so I'm going to put a link to the article because I took a little bit of Schadenfreude from this because Greta's very upset that things aren't going the way she wants them to go, which is encouraging for the rest of us. So I'll put a link to that. But um, I don't I'm not a doctor. I'm not going to get into that, but this is the face of evil. I don't care what anybody says. That is not, if this person could actually have power, I don't even know what she would do. And there are people that when they get in power, these communists have demonstrated, these Marxists have demonstrated it many times before, they're not going to reason with the opposition. They're not going to try to convince you with logic. They're just going to get rid of you. And that, if you don't believe me, go to your local library and check out the Black Book of Communism, and it will go through all of the history of all of the communist regimes throughout history. And you will see the quotes from Lenin, the quotes from Stalin, the times, read Solzhenitsyn. I mean, people would get a 10-year, they used to call it a 10 spot, get a 10-year sentence for doing something in the Soviet Union, and they would write letters of appeal to Stalin, and he was the exact one that was signing the deportation orders to Siberia. So this evil has to be checked. It has to be made aware of. Now, you know, it's a constant flow back and forth. So I think people need to be aware of these things. Most people are aware, I think, but is it actionable? Yes, because if you get certain people in power like Elizabeth Warren, I mean, I don't think she's going to become the president. I don't think she can do this, but they make wild statements. I'm going to ban all fracking in the United States with an executive order. I don't think she could actually do that, but if she did, I mean, that's actionable. Oil and natural gas prices would go through the roof. So when people say, well, what's this got to do with anything? It has a lot to do with things because politics, just like energy, like I've said before, it permeates everything. It infects everything, this politics. We don't have a free market system. We have a credit system. We don't have capitalism. We have creditism. Everything's based on debt and credit. And, so politics inserts itself in everything. I mean, politics has completely mucked up the healthcare system. So, as an example. So, I bring this out not to antagonize you guys. Some of you guys, you think that there's a climate crisis. God bless you. Allah be with you. You should go protest that. You should do whatever you think you need to do. I don't agree with you. But when I see that, the statement like this, the agenda is not just about the environment, but about fighting the colonial, racist, and patriarchal systems of oppression. What has that got to do with a climate crisis? This is the same thing that AOC and her former campaign manager, Sackbot Chakrabarti, said that the Green New Deal really had nothing really to do with the environment. It had to do with remaking society in their image, because a 16-year-old and a 28-year-old bartender and a 27-year-old tech millionaire know better than everybody else. And that is what is scary. So enough said on that. Big news this week. We were off for a week, guys, for the holiday. Hope everybody enjoyed it, but we're back now, and things are starting to happen in these markets. OPEC will cut production to maintain price. OPEC agreed to deepen reoccurring production cuts by an additional 500,000 barrels per day through March 2020. OPEC plus means Russia, will reduce total oil output by 1.7 million barrels per day. Guys, we're having an expectation that oil demand is going to increase by 1 million to 1.5 million barrels per day. OPEC said they will review the policy at an extraordinary meeting on March 5th and 6th. Here's my last note here. I think we're setting up for what I've kind of been laying out the last several months. My view is that the extraordinary amount of monetary inflation that's going on, not just in the U.S., but around the world. We have all these central banks cutting rates, pushing as much credit and currency units out there. I'll show later in the next slide, but economies are turning around the world, including the U.S. If you put enough money out there, you can get nominal GDP growth. And now you have OPEC cutting production, cutting supply of oil as we're going into possibly a increase in economic activity, which will lead to more energy demand. This is setting up very nicely for what I thought would happen. You know, with interest rates at zero, with interest rates very low around the world, with $15 trillion of government debt trading negative, what's the regulator on the economy? Typically, you know, the Federal Reserve, as I've said before, the Federal Reserve, you know, has this big hammer that they try to use to control the economy. And it's interest rates. And what happens now with rates so low, with this repurchases going on, this sleight of hand QE4 in the United States, plus the 80 plus central banks around the world that have been cutting rates for the last several quarters. I'm going to show another slide that shows the Council of Foreign Relations tracking of interest rate cuts. It's at 2008 levels, guys. We have a liquidity wave that's getting ready to hit the world economy. And what I think is going to happen, you know, typically what happened in the past, you would start overheating the economy, the Federal Reserve would raise rates, you would go into a recession. You know, economies do not just stop expanding. They can theoretically expand forever, but they're limited by capacity constraints in labor and materials supply. Prices go up, productivity goes down, inflation goes up, at least price increases go up. And then the Federal Reserve steps in, raises rates, and kills the economy. That's been the cycle. But what are they going to do now? With so much debt, even in the government debt, they can't raise rates very high. You saw what happened this time last year when we were in this massive rate-raising cycle. And the economy and commodity prices crashed last year. If you remember, the stock market was down about 20% through the end of the year. And then we had this biggest turnaround in monetary policy. Really, no one's really talking about. This is radical. What's happened in the last year? It's unprecedented in monetary policy history in the United States. So I think what you're going to see, and what I'm predicting, is that I think that the energy prices are going to increase. The underinvestment is now going to manifest itself. OPEC's cutting supply just as demand is getting ready to go into an upswing, in my view. And we're seeing additional issues here in the United States with the shale boom. Rig count continues to go down. Here's Eric Nuttall, our guy up in Canada, the last of the Mohicans, the one running one of the last energy-focused funds in Canada. I think the only one left. And, just what he says here, he says, reiterate, shale production growth deceleration to less than global demand growth rate equals hugely meaningful positive development for the oil market. So that's right. Our contention has been that the because shale was expanding so massively every year over the last several years, it was covering the increases in oil demand that were happening around the world. Remember, oil demand typically goes up 1% to 1.5% a year every year. Being that we're at 100 million barrels a year, or 101 million barrels of demand per day, the shales boom, if you will, now bust, was covering that demand growth. So other conventional sources of oil around the world were not being invested in. Now, because that boom blew up, just like every boom blows up, it was a false boom created by cheap money, and now that's, it's reconciling itself. So what are we going to do? We're still going to have shale growth, but it's decelerating. The growth is decelerating, and I think it's going to continue to decelerate. So I even read an article that this week, I couldn't find it for the video, but even Exxon, that was going to be the savior. Exxon and these big companies were moving into the shale basins, and they were, because of their scale, they were going to be able to make money. And we're finding out that they can't even make money. They're not making very much. So I think this is setting up, like I said, for something big this year in 2020. I think everything's starting to come together. I think we're getting dealt a really decent hand here. And I really think that, we had a little bit of pain since we've been having these videos. We've been talking about this. What's going to be the catalyst? And now the shale boom's finally blowing up. We have OPEC cutting, 500,000 barrels a day of production to maintain price, just as we suspect demand is going to increase. And where am I getting my information? Well, I follow the global PMIs. Here's Global Manufacturing Purchasing Manager Index surveys for global manufacturing PMI. And you see it was in decline from 2018 to recently, and it's now turning up. So what are we saying here? We're saying the green line is the global manufacturing PMI. And it was in decline, which we knew and we talked about. And that was going to affect commodity demand, obviously. Now it's bottomed and it's now turning up. Why? Well, we've talked about this. We're throwing so much currency at this, created money at the problem. You're going to get nominal GDP growth. And you see the orange line is the percent of countries with PMI rising. It's a 3-month average. Okay? So we've seen in the past when that goes up, we see the PMI follow it. So we have, 60% of the countries with a rising PMI, okay? So it doesn't get much higher than about 65%, but we're going in the right direction. And global manufacturing PMI is going to follow. So I don't know how much or how great the upturn will be, but we will get an upturn. And I think it's going to be inflationary. It's caused by inflation, by money creation. It's not real. It's nominal. It's not real GDP growth. And I think that what's going to really and I think we're going to get a blow off top in the stock market here this year. And I think Trump's timing things perfectly. I think it's all up to him if we get a deal with China. And I think he's going to pull. That's going to happen. You're going to get a big run in the stock market. He's going to pull it out right before the election, not the week before, but several months possibly, maybe in the spring, and then that will carry into, you'll have all cylinders hitting, and you're going to see energy prices take off. Possibly, that's my view at least. So that's the discussion on oil. I mean, let's talk about monetary policy. This is from the Council of Foreign Relations. I'll put a link to it. You can go there. They show a map. They show which countries are easing. But they have this index of global easing/tightening. Look at where it is right now. It's at -9. So on this spectrum is easing, index of global easing. The further you get to the left, the more easing. The further you get to the right is the more tightening. Look where we're at. I mean, we're at levels that we haven't seen since the 2008 crash or these other periods in history. So we had this massive tightening going on around the globe over the last, not massive, but we were in a tightening mode pretty much from 2017 to late 2018 when we had that flash crash. And look what's happened in the last year. That's what I've been talking about. You're way over here. We got tremendous amounts of money creation going on around the world. Are you telling me that there's not going to be a response in the economies? I mean, that's why you're seeing this pickup in the PMIs. And you will see price increases. You can force economic growth by creating currency units. That's what's going to happen. And I think we showed a chart in several videos before from Frank Holmes over at US Global Investors. When you see global PMIs get above 50 and are moving towards, the higher they go, I mean, there's a lag effect, or not a lag effect, but there was a chart that showed that where copper and oil prices would be higher as these PMIs. That's just the historical narrative. That just is common sense. So I think it's coming. I think we've had a lot of pain in the portfolio. I'm not going to deny it. It doesn't look good when you look at our portfolio. We have a lot of resource stocks. We have oil-based stocks, but I think the sentiment is changing. I think the facts and the narrative is changing finally for us, and we're starting to get the wind in our sails instead of fighting against the current. So I don't want to sound like a mental patient that just keeps desperately clinging to some narrative that's not correct. I think that the narrative is now moving in our direction, and I expect that 2020 is going to be a big year for resource markets and a recovery year for a lot of these companies that we're involved with. So anyways, let's talk about uranium. I haven't talked about it in a long time. I'm a generalist investor. I follow people that are a lot smarter than me on subjects. For example, on Twitter, there's a lot of good information, a lot of guys that are just focused just on uranium. But, talking about like the working group speculation, that's supposed to be getting announced. It's kind of gotten leaked out. Will there be U.S. government buying of domestic uranium or things of this nature? I don't know. I mean, it all comes, I try to keep it simple. I was interviewed by Smith Weekly last week, and we talked about this, and I just go back to, what Marcelo Lopez says about this. It's not really hard. Is demand for uranium going up? Yes. Is supply of uranium going down? Yes. Is there a substitute for uranium fuel for nuclear reactors? No. Is there going to be a supply gap, a supply-demand gap, and it's going, when do the utilities have to come back and start negotiating long-term contracts? Yes. So it's just, I try to keep it simple. I don't try to get into them, well, what's the working group going to say? I don't know. It could help with sentiment if it comes positive, but I really don't know. I mean, when the news comes out, we'll of course report it here, and we'll discuss what we think the ramifications are. But I don't like to get into this what if scenarios. I mean, the what if scenarios, anything can happen, right? I think you just need to keep it simple and focus on the fundamentals, which are, without a doubt, they are not in dispute. Interesting, North Shore Global Uranium Mining ETF came public this week. This is what I think most people should, if they have an interest in uranium and uranium mining, this is the type of vehicle I think that you should consider. Talked about this also on the podcast with Andrew, or his podcast. It's very difficult to do the work of going in and analyzing these companies, trying to figure out what they're really doing, if the people there actually know what they're doing, do they have enough money to survive and not dilute their shareholders into infinity. So I think if you're just a general investor and you're listening to this video and you have an interest and you say, yeah, man, I get it. Okay, what you're saying is correct. I can see it, but I don't know which company to buy. I think this is, a market cap weighted ETF that's, you don't want to be in URA because they've really punked it out and screwed it up by putting all these engineering companies in, and Hyundai Heavy Industries that has less than 1% of their revenue comes from nuclear. I mean, crap like that. They've really killed that ETF. But you've seen this ETF now come to market. The Horizons ETF in Canada has come to market. They're pure play uranium mining company ETFs. You're getting the diversification. They're market cap weighted, so you're going to see a lot of Kazatomprom and Cameco in there. That's going to be, not going to kill you, and you're going to get a sprinkling of a lot of the juniors based on their market caps. And I even say this here. This is the index is divided into it's based on this index that was created, but anyways, is divided into two buckets. The first bucket is allocated 82.5% and comprises companies that devote at least 50% of their assets to the mining, exploration, development, and production of uranium. The second bucket, which receives a weight of 17.5%, is composed of companies that hold physical uranium, uranium royalties, or other uranium-related non-mining assets. So I think if you're not wanting to do the work, if you're not capable of doing the work of going through all the companies and trying to figure out who's who and what's what, which companies are legit, which companies are lifestyle companies, which companies have people that actually know what they're doing, maybe I would suggest these type of vehicles are for you. Are you going to find the 10,000% mega uranium, runner? It'll be part of the index, which the chance that you think you're going to take $1,000 and put it in and find the company that goes up with 10,000% the next run or whatever, 5,000% are not in your favor. But there's nothing wrong with getting in something like this and see it go up 5, 6, 7 times or 10 times possibly. I mean, depending on how far the market runs. Even if you get a double or triple over the next couple of years, you're going to be beating the indexes, in my view, of the general market. So I think that's part of the issue. I mean, we're getting long in this video, but I want to reiterate: you got to have your expectations straight. What are your expectations? That you think you're going to find the 1,000 or 10,000% return company? If that's your expectations, you need to get your head right, because that's not probably going to happen. The goal should be to find the undervalued sectors that are turning and then are going to return to you above average returns. But that doesn't mean thousands of percent. If you can get a double or triple out of this over the next couple of years, you're going to be looking pretty good. And if you can keep doing that over the years, finding undervalued sectors of the market and keep compounding even that at that rate, you're going to be looking pretty good. So I think people really need to get their expectations. I mean, what's the average? If you put your money into an S&P index fund, you're looking at an average return of like 9.5% over the last 50 years per year through all the ups and downs. And we're talking about if you can double that, if you can get a 20% return every year just by speculating in some of these undervalued markets, you're going to be looking really good in 10 or 20 years. And yes, occasionally we're going to, I've hit some 1,000%, 2,000, 5,000% returns. I've also had a lot of 80 and 90% declines. That's the problem. If you're hitting 50% or 40% and you can hold on and catch some of these waves, you're going to be doing pretty good. You're not going to hit 100% accuracy. You're not going to hit 50% accuracy, most likely. So I think if you're a general investor and you can't do the work or you don't want to do work, I think these vehicles that are coming out, these ETFs, are looking pretty good. Now, the expense ratio is 0.85% a year. That's almost 1%. But I don't think you're going to care over the next 3 to 5 years where we think uranium's going. It's not going to matter. Wanted to talk about uranium royalty. Saw this news. Some people aren't going to like these comments, but I'm just going to tell you, I would stay away from this thing. I haven't got a chance to read the prospectus. That's what you need to do. They have a website up. Don't go look at the presentations and the website. Go to CDAR, download the prospectus, and read through it. Okay? What are the properties? Look at the properties. Well, most of them that I saw, I just did a cursory look at this thing before I got this video out. I'm going to do a deep dive of the prospectus, but everything's in development. There's no producing assets. So again, this thing's burning cash. Our old friend Amir Adnani is the chairman of the board. This is another Amir Adnani, Marin Katusa, Vancouver exchange circle jerk up there where they take this thing public and they get the warrants and all this stuff. So if you're an insider and you got on the private placement, probably do okay. Most of those people have already sold that stock to the retail public when this thing came public, and they're holding the warrants. I'm not a big fan of Amir Adnani and what he's done to UEC. I used to be a fan of Scott Melby, but when you're going to hook yourself up with a guy like Amir Adnani, who's created basically a lifestyle company at UEC, in my view. I don't know. I'd stay away from this thing. If you're bound and determined to get into this, please read the prospectus, but I would stay away from it for right now. It may turn out to be something good, but I think, we need to read the prospectus. I want to see, what the plan is. I mean, just looking at the website, just looking at the history. Now, granted, no one has done well in uranium as any of the managements, okay? But this guy takes a big salary at both his companies that he's already running. I mean, he's got all these high buck people on the payroll. They burn through cash and they do uh, private placements, and they dilute. So, if this thing turns, this thing probably goes up, but look at the properties. None of them are on producing properties or anywhere near to producing. So, quite frankly, in my view, just as a cursory look, some of those properties will never come into production, in my view. So, I would take a look at this. If you're really interested, when it first was being discussed, I'm a big fan of royalty companies, so I was looking forward to this. I was looking forward to, okay, what is this thing going to do? It's going to be a vehicle. Royalties I'm a big fan of. Everybody knows that. Gold royalties. I'm a big fan of Altius Minerals up in Canada, the royalty, how they run their royalty models, buying things when they're very cheap. But they have producing royalties. They have cash flow. They pay a dividend. They buy back shares. I'm not sure how this thing is going to create value for me. So I'm not here to bash these guys. I'm just telling you that's my opinion. I'm one man out there, but I'm not a big fan of these guys and just how they've conducted themselves during this bear market. When you're in a bear market like this, you should be conserving cash. You should be trying to align yourself with shareholders, avoid dilution, and I don't see that. So enough said on that. That's all I'm going to say. So that's about it for this week, guys. I appreciate the comments. Let's keep them coming. We're back to work now. Obviously, we have Christmas coming up, but we will continue coming to you on a weekly basis, and probably take off. I don't know. It depends what I got going on during that week. So appreciate you guys tuning in. I appreciate the support. Please keep it coming, and we'll be looking to talk to you next week. Thanks, guys.